But in fact, Hipólito and Mejia in his own particular way managed to really screw up his own re-election. And Medina got in power. And Medina got in power really because Fernandez went and spent as much as he did. He kept the gasoline subsidies up, he kept electricity subsidies up. He kept the country feeling happy about the economic state of affairs so that they would re-elect the PLD. But Danilo now faces a massive deficit, and he pushed through in a matter of minutes, a really tough tax reform that essentially raised taxes from the VAT to income tax to corporate taxes. He did very little to slim the size of government. The size of government in the DR had grown in terms of expenditure about twofold under Fernandez. It was full of all kinds of fat that could have easily been trimmed, and he failed to do that. And so as a result, he's going to be chasing revenue for the next 4 years, and it's going to be a difficult chase because investment by Dominican groups will not keep the pace. And so what he's doing is he's doing his best to go around to everyone who's invested in that country, the Odebrechts, the electricity producers, and he's trying to renegotiate his contracts with them. He's looking for extra revenue. And what I think we see ahead of us in the DR for the next 4 years is very small levels of growth and really tough conditions for business as the government does its best to scratch as much revenue out of industry in that country. And so a country that has been the darling of investors for the last 8 years, I think the news has still not caught up, I would say, in a lot of the analysis that you read about the country. But I think over the next year, you're going to see a more and more pessimistic view of the DR and the business conditions there.
Yeah, so let's talk about some countries that get investors nervous. Sorry, Jonathan. Venezuela is a country of amazing potential, but almost no Canadians will touch it with Chavez in power. Argentina enjoys a deep mining relationship with Canada, but there's talk of currency controls and difficulties in getting capitals out of the country. What will happen in Venezuela and Argentina this year? Our lead on this is John, and our comment is Eduardo.
I still think that if there is an election, if Chavez passes this year and there is an election called, I still think that Chavistas will win. I think that even though it would be possibly a boost to the opposition still has a really tough time in getting their message and convincing voters outside of the major cities. And when Venezuela under Chavez went from a bi-chamber to a single-chamber government, they gave as a sort of, they got rid of their Senate essentially, and the Senate was geographically divided, much like the U.S. Senate. And so the less populated states in the southern parts of the country were given, in return for their sort of positive representation at the Senate level, they were given a disproportionately high number of congressional seats. And so it may be 400,000 people for every representative in Caracas, but in the southern provinces more like 70,000 people for every representative. So the reality is that to win an election in Venezuela, to control the House, you have to win across the country. And that's an expensive proposition. That's a very difficult proposition when you have the kind of government control of the media. And so the ability to reach the hinterlands of Venezuela by the opposition is really challenging. I also think that Nicolás Maduro will consolidate his lead and will prove to be a pretty effective leader of the party. A lot of investors there actually prefer this scenario because the other scenario of either a military intervention or a sort of messy transition to opposition scares them as much as Chavez has ever scared them. Now, most people in this room are not invested in Venezuela unless you're a very savvy bond investor. But I want to point out that Venezuela is still a very exciting place to export to. And there's lots of companies, a lot of them based in Miami, that make oodles of cash exporting to Venezuela. And unless you're selling foodstuffs or certain staples, you're not really bound by the restrictions of CAA exchange rate. You basically, people will buy your goods at the informal rate without any restrictions. And companies like Zara, the Spanish clothing company, make more money per store in their Venezuelan stores than they do any other country in the world. The fact is that there's incredible consumer appetite in Venezuela, and there's very few people servicing that appetite. And so if you can figure out a way to export, get paid abroad, which most Venezuelan importers are accustomed to doing, then it is still an exciting market to export to. I would not advise anyone to invest in Venezuela, but an export model is still very exciting. In Argentina, Kirchner is once again losing a lot of support, and everyone predicts that at the midterm elections this year, that in fact she will lose control of the Congress, and that will certainly limit her ability to govern going forward. From the Canadian mining perspective, Argentina is a unique market in the sense that it's a federalist country, and the natural resources, mining resources, are actually owned by the states. And so what you have in Argentina is a patchwork of some very pro-mining states like Santa Cruz and San Juan, and some that are much more, make things much more difficult. Places like Chubut and Mendoza, where, for instance, they've prohibited the use of cyanide in mining. And so for mining companies, those who are located in the pro-mining states, they'll tell you that things are going fairly well. Now, the federal government can still make life difficult. They can still slap an export tax on the export of whatever your mineral is, and did so in 2007, and could very well do so again. But most of I think the nationalization threats, are focused much more on the energy sector and much less so on mining. And the sort of the historical baggage associated with mining that you find in places like Peru and Mexico is not as prevalent in the psyche of voter or the government in Argentina. So, the point is that mining interests continue to look at Venezuela or at Argentina. They're a little trepidatious about what noise the federal government could make, but as long as they're sticking to these pro-mining states, they're fairly bullish. For many other investors in industries that are regulated by the federal government, it is a scary place because you don't know which side of the bed Madam Kirchner is going to wake up on. In many ways, she's less sort of predictable than Chavez. Chavez has pretty much set out a path 10 years ago and has followed that path, whereas she oscillates between sort of kissing the hand of investors and then slapping it the next day, and it's really a tough place to predict. I'll stop there. There's lots of other countries we could talk about, but I'll stop there.
Okay, well, this morning as I was walking to work, it was all icy and I was struggling to stay on my feet and clean so I could be here. But apparently I don't learn very well. I should have learned that it's not good to walk on slippery slopes, but I'm going to walk into a very slippery slope and try to read what's going on in Venezuelan politics. My first reaction when Chavez left power in December and apparently the situation got very serious was that the optimum thing for the Chavez government to do would be to call elections very, very quickly. Because Chavez had just won a crushing victory on the municipal elections, where the opposition lost practically every governorship that was out for grabs, including the ones they held. And there was potential for if Chavez stepped down, there being some sympathy, and his party would be united behind him because he had just appointed Maduro as his successor. So I thought it made sense for him to call for election, or his party to call elections soon, but they didn't. So the outlook has been very hard to read, but I think yesterday we got a clue that something could be coming. There's serious pressures to depreciate the currency, which I would expect them to not want to do soon because that would be very costly in elections. But yesterday the central bank came up and changed the rules of how the whole wealth is distributed and cut the funding for them, which is Chavez's discretion. He basically gets billions of dollars and puts it inside a bank account, and he can do whatever he wants with it. He doesn't have to report it to anybody. that goes to fund other governments and to fund spending domestically. And he cut that. So the fact that he cut the spending within the government, I think signals that he's not thinking about the political goodwill for the long term, but rather keeping the currency stable and avoiding depreciation, because the money that he took away from Fodena went to the central bank. So that suggests that they want to prop up the exchange rate and avoid a devaluation. So I think that suggests that what John is saying about them thinking about an election in the fairly short term is true. So whoever takes power probably comes in and I would expect to follow a path similar to what Hausman suggested in this event of 3 years ago and has been happening. When they take power, I think that they will be forced to evaluate the currency. When they do so, inflationary pressure will keep on building, and so Venezuela will be forced to try to control prices, and that could mean further nationalizations and attempts to curb prices until the whole regime is not supportable. And that, I think, suggests that the next president probably doesn't have the charisma that Chavez does, and so we'll have a change of regime at the longest at the next presidential elections. In Kirchner's case, Kirchner cannot constitutionally run for another term. So that suggests, well, that the next elections, either she will appoint one of her party members to run, or that she will try to change the constitution. She is not very popular right now. Inflation is running. She has a hardcore base of supporters, which is organized. But if the opposition can unite behind an opponent, they could beat her. So there is potential for light at the end of the tunnel in politics in both countries. Sadly, once that happened, I think the best scenario that either country faces is what Latin America faced in the 80s, which is a stagnated economy for a decade.
So let's go back to optimism. Everybody's favorite question: what are the 3 biggest opportunities in the region for 2013? Let's start with Rob.
In the region. I'll focus on the Caribbean. A couple of things I kind of mentioned just by the backdrop is that the tough, it's a difficult time with a more optimistic future. So one of the things is just pricing is good. You'll find tremendously more attractive pricing in the overlooked countries of the region rather than the hot countries in the region. And I think that bodes well for really for any type of investment. The particular sectors that continue to be attractive the energy or electricity production. When you look at the islands, I mean, the whole thing on electricity and energy production is a big, huge need. Both from the number one import in many of the countries is oil, and that plays havoc with their current account deficits, and also it's not great for tourism when you're burning oil. So to the extent that they can bring renewables and the cost of renewables comes down, and they can get distributed power generation that avoids the cost of investing more in the grids, those types of things are much more possible right now, and the pricing makes it attractive, so you can actually get pretty decent equity type returns out of utility type investments in the Caribbean region. So we see that as a big opportunity in the region. I think the other one is a number of the properties have been, I mentioned the digestion of the inventory, the overhang of leftover inventory of real estate. We see a number of them have actually changed hands right now and capitalized, so there is momentum on that. We're probably in the last leg of that digestion process, which means there are still good distressed properties available for sale, and the timing is probably good because the timing's buying it closer to when the turnaround happens. The last is just good quality domestic businesses. They've been, because the prices are good, but they've also gone through a period of consolidation. The weak have died and gone away. What's left are very strong, well-capitalized businesses at great PE and price to book type ratios. So what you've got is cash-rich companies that are very strong, very well-capitalized in a very difficult economy, but that means you get a very strong business at a great price at a time when, if you're more optimistic on 2014 forward, it makes for a good time to be